All right, so you just reported earnings, and despite the pandemic, you had a pretty strong fourth quarter and really full year record Q4 and full year profitability, safety performance. Perhaps not that surprising given the resilience, I guess you could say, we've seen in the industrial part of the economy in the midst of COVID. What really got my attention, though, was this outlook and some of your comments there that you believe underlying demand fundamentals will reset, establishing 2021 as the year during which the nation regains its economic footing. What are you seeing? Where are those pockets of strength and I guess, significant green shoots?
Morgan, what we're seeing is it seems businesses have found a way to manage through this type of COVID environment. And what we're seeing in particular was a nice series of momentums that went into the fourth quarter. Infrastructure was clearly getting better. State departments of transportation have sorted out that they can manage through this and do it well. Just as we've managed our workforce very safely through COVID, DOTs are seeing that as well. And keep in mind, that's typically around 40% of our volume. But importantly, on the private side, what we're seeing in particular is housing is doing much better. But here's the key to it, Morgan. Single-family housing is doing much better. So we're seeing several things. One, single-family housing for us is 2 to 3 times more aggregates intensive than multifamily housing is. But the other piece of it that's important is the drag-along effect in portions of non-residential that tends to follow a good residential story. So in non-res, we've seen heavy non-res, meaning warehousing, Amazon fulfillment centers and the type, doing quite well. And they tend to be very aggregates intensive. But as we sit here today, public is doing better, private is returning, and we also feel like we have good prospects as we enter into 2021 in seeing a long-term transportation infrastructure bill out of this 117th Congress as well.
Yeah, I was actually just going to go there with you with the non-residential construction, given the fact that we have seen ABI and Dodge both predicting a slowdown, but you kind of just tackled that one. So let's turn our eyes to infrastructure. I mean, we have a portion of this latest stimulus deal today. The House panels are expected to vote on $57 billion focused specifically on transportation. There's this expectation out there that we are finally, after years of discussing it, going to get a bigger, broader infrastructure bill or deal this year. What do you expect? How much of that is, I guess, baked in or not baked into your outlook right now?
Well, none of it's baked into the outlook right now. So our outlook is based on what we're seeing and what exists today in the marketplace. Now, based on what we're expecting, here's some things that I would encourage you to think about. If we go back to 2019 and what was then a Republican-controlled Senate, the Senate EPW, the Environment and Public Works Committee, came out with a proposed bill that was 28% above today's bill, which is the FAST Act, or Fixing America's Surface Transportation Act. And then last year, in 20, the Committee of Jurisdiction in the U.S. House, the House Transportation and Infrastructure Committee, came out with a proposal that was 42% higher than the FAST Act. We think the punchline is this. Whether they go with the Senate proposal or the House proposal, we're likely to see in transportation funding the most significant increase in over 15 years, and that's from the federal side. It's important to keep in mind, though, Morgan, that half of what's being spent is coming from the various states. And part of what we've tried to do at Martin Marietta is make sure that we've aligned ourselves in our business with states that have superior population inflows, but also fiscal conditions. Yeah. So if we're looking at our top 5 states, Texas, Colorado, North Carolina, Georgia, and Florida, they're all either better going into 2021 than they were in 20, or even with 21. And we feel like from a starting point, that's not a bad place to be.
Shepard Smith here. Thanks for watching CNBC on YouTube.